Most people believe that the difference between them and a billionaire is luck, background, or opportunity. They think billionaires had something special from the start that they didn't. But the truth is far less dramatic and far more important. The real difference is not how much money they make, but how they think about money from the very beginning. Two people can earn the same income, live in the same city, and have the same responsibilities. Yet one slowly builds wealth, while the other stays stuck. That gap doesn't come from effort alone. It comes from decisions, priorities, and principles that most people never learn. In this video, we are not talking about get-rich-quick tricks, viral side hustles, or motivational quotes that sound good but change nothing. We are talking about the real financial principles that billionaires consistently follow to grow wealth over time. These are ideas that shape how they earn, spend, invest, and protect money long before they ever become wealthy. You don't need millions in the bank to apply these principles. You only need the willingness to think differently and act with intention. By the end of this video, you'll understand why some people turn ordinary income into extraordinary growth, and how you can start applying billionaire-level thinking to your own financial journey, no matter where you're starting from. First tip: billionaires focus on ownership, not just income. Most people are taught to focus on earning more money, usually by working harder, asking for raises, or switching jobs. While income is important, billionaires understand that income alone does not create wealth. Income is temporary and depends on time and effort. Ownership, on the other hand, creates long-term financial growth. When you own something that produces value, money can continue to flow even when you are not actively working. This is the key difference between working for money and building money-producing systems. Billionaires prioritize owning assets instead of relying only on salaries. Assets can be businesses, shares in companies, real estate, intellectual property, or any system that generates cash flow or increases in value over time. Salary stops the moment you stop working. But ownership continues to reward you as long as the asset remains valuable. This is why billionaires don't just ask, "How much can I earn?" They ask, "What can I own?" Another important part of this mindset is understanding the difference between assets and liabilities. Many people believe they are building wealth because they earn more and upgrade their lifestyle. In reality, they are increasing expenses, not ownership. Billionaires are very careful about what they buy. They prefer things that put money into their pocket rather than take money out of it. This discipline allows their wealth to grow steadily, while others feel stuck despite higher incomes. Ownership also creates leverage. When you own a business or shares in a company, other people's time and effort can help grow its value. This allows wealth to scale beyond personal limits. You don't need to start big. Even small steps toward ownership, like investing in skills that can be turned into a business or owning a small percentage of an asset, move you closer to long-term financial growth. This is why billionaires build wealth differently from everyone else. Second tip: billionaires master cash flow before chasing wealth. Before billionaires ever think about investing big money or expanding their wealth, they first make sure they fully control how money moves in and out of their lives. Most people focus only on how much they earn, but billionaires pay close attention to what they keep. Cash flow is the foundation of financial growth, and without mastering it, even high income can disappear quickly. This is why many high earners still feel financially stressed while some lower earners slowly build stability. Billionaires understand that money without direction behaves randomly. If income is not assigned a clear purpose, it will be consumed by lifestyle upgrades, impulse spending, and short-term desires. Instead of letting money flow wherever it wants, they create systems that guide every dollar. Expenses are planned, savings are automatic, and investments are intentional. This structure turns income into a tool rather than a source of stress. Another important aspect of cash flow mastery is living below means, not as a sacrifice, but as a strategy. Billionaires don't avoid comfort, but they avoid unnecessary excess, especially in the early stages. By keeping expenses controlled, they create surplus cash. That surplus becomes the fuel for investing, opportunity, and growth. Without surplus, financial progress is slow or impossible. They also prioritize liquidity. Having accessible cash allows quick decision-making when opportunities appear and protects against unexpected problems. Many people lose progress because one emergency forces them into debt. Billionaires reduce this risk by maintaining strong cash buffers and predictable financial systems. Mastering cash flow is not about being cheap or restrictive. It is about control and clarity. When you know exactly where your money's going, you gain power over your financial future. This principle is often ignored because it feels simple. But it is one of the most important reasons billionaires are able to grow and protect their wealth consistently over time. Third tip: billionaires think long-term, not short-term. One of the biggest differences between how billionaires grow wealth and how most people manage money is time perspective. Most people make financial decisions based on what feels good right now. They focus on immediate comfort, quick results, and short-term relief. Billionaires, on the other hand, consistently think in years and decades. They understand that real financial growth takes time, patience, and consistency, and they are willing to delay rewards today to gain much larger benefits in the future. This long-term mindset allows billionaires to take advantage of compounding. Compounding is not just about investments. It applies to habits, skills, relationships, and systems. Small, smart decisions repeated over time create results that look dramatic later. While others get frustrated because progress feels slow, billionaires stay committed because they trust the process. They know that early stages often feel boring and unexciting, but this is where the foundation is built. Long-term thinking also changes how risk is handled. Instead of chasing fast profits, billionaires focus on sustainability. They avoid decisions that could bring quick wins but cause long-term damage. This includes unnecessary debt, emotional investments, and impulsive spending. They prefer steady growth over unpredictable spikes because stability protects wealth. Another powerful result of long-term thinking is emotional control. When you are focused on the future, short-term losses or slow periods don't cause panic. Billionaires expect setbacks and plan for them. This allows them to stay calm when others react emotionally and make poor decisions. Thinking long-term does not mean ignoring the present. It means balancing enjoyment today with security tomorrow. By aligning decisions with long-term goals, billionaires ensure that their money continues to work for them year after year. This mindset is one of the most important reasons their wealth keeps growing, while others remain financially stuck. Fourth tip: billionaires invest in skills that multiply income. Billionaires understand that money is a result, not the starting point. Before wealth grows, value must be created, and value comes from skills. Instead of chasing quick money or relying only on one source of income, billionaires focus on developing high-impact skills that can increase earning potential again and again. These skills allow them to adapt, scale, and grow, even when markets change. One key difference is that billionaires invest in skills that are transferable and scalable. Skills like decision-making, leadership, problem-solving, communication, and systems thinking apply across industries and opportunities. While technical skills may help earn income, strategic skills help multiply it. This is why many billionaires can succeed in multiple businesses rather than being dependent on a single role or job. Another important factor is continuous learning. Billionaires treat learning as a lifelong process. They read, study, seek mentors, and surround themselves with people who challenge their thinking. They understand that the world changes, and staying relevant requires constant improvement. Many people stop learning once they start earning, but billionaires do the opposite. They keep learning so their earning ability keeps expanding. Skill investment also reduces financial risk. When your income depends only on one job or one narrow skill, you are vulnerable. But when you develop a wide range of valuable skills, you become more resilient. Even if one income source disappears, your skills allow you to create new opportunities. Most importantly, skills create leverage. Strong skill set allows you to build teams, systems, and businesses that operate beyond your personal effort. This is how income grows without matching increases in time worked. By investing in skills first, billionaires build a foundation that supports long-term financial growth and freedom. Fifth tip: billionaires protect capital before chasing high returns. One of the most misunderstood aspects of wealth is risk. Many people believe that billionaires grow rich by taking huge risks and making bold bets. In reality, most billionaires are extremely careful with their money. Their first priority is not making more money quickly, but protecting what they already have. They understand a simple rule: it is much harder to recover from big losses than it is to grow steadily. Billionaires focus heavily on downside protection. Before making any financial decision, they ask what could go wrong and how bad the damage could be. If a potential loss could significantly set them back, they either avoid the decision or limit their exposure. This mindset keeps their wealth stable even during economic downturns, market crashes, or unexpected events. Another important part of capital protection is diversification. Billionaires do not put all their money into one idea, one business, or one investment. They spread risk across different assets, industries, and opportunities. This does not mean avoiding focus, but it means avoiding total dependence. If one area underperforms, others can balance the impact. They also maintain strong financial buffers. Emergency reserves, liquidity, and access to cash give them flexibility and peace of mind. This allows them to make calm, rational decisions instead of acting out of fear. Many people lose money not because of bad opportunities, but because they are forced to sell or borrow during difficult times. Protecting capital also means avoiding unnecessary debt. Billionaires use debt carefully and strategically, not emotionally. They avoid borrowing for lifestyle or status and focus on preserving long-term stability. By prioritizing protection over excitement, billionaires ensure that their wealth survives, grows, and compounds over time instead of being wiped out by a single bad decision. When you look closely at how billionaires grow their wealth, one thing becomes very clear: their success is not built on secret tricks or sudden luck. It is built on principles that they apply consistently over time. They focus on ownership instead of just income. They control cash flow before chasing bigger goals. They think long-term when others are distracted by short-term comfort. They invest in skills that multiply value, and they protect their capital as if it is more important than fast growth. None of these ideas are complicated, but they require discipline, patience, and a willingness to think differently. The most important lesson to remember is that you, Dantine, need to be a billionaire to start thinking like one. 8. These principles work at every level of income. What matters is not how much money you have today, but how you manage, protect, and grow it over time. Small changes in mindset and behavior, when repeated consistently, create powerful results. Wealth is not built in moments of excitement. It is built quietly, through systems and habits that most people ignore. If this video helped you see money from a new perspective, then it has already done its job. Take one idea from this video and start applying it in your own life. Don't try to change everything at once. Progress comes from consistency, not perfection. If you found value here, support the channel by liking this video so more people can benefit from these ideas. Share it with someone who is working hard but wants to grow smarter financially. And subscribe to the channel for more clear, practical content that helps you build long-term financial growth. Remember, wealth doesn't come from earning more alone. It comes from thinking better, managing wisely, and staying committed to the long game.